Hello, my name is Denise CalviD, and the purpose of this PowerPoint is to analyze Apple Inc.'s 2024 Statement of Cash Flows. We will be evaluating Apple's financial performance through the lens of its cash flows, identifying how effectively the company manages its cash to maintain operational efficiency and financial stability. The three areas of focus are operating, investing, and financing activities. These are three key sections of the statement of cash flows. This slide provides an overview of the three main sections of Apple's statements of cash flows, which together present a complete picture of how the company manages its cash resources. Operating activities focus on Apple's core business operations. This shows how much the cash the company generates from selling products and services after covering its day-to-day expenses. Strong positive cash flow here signals healthy business performance and operational efficiency. Investing activities capture Apple's spending on long-term growth and innovation, such as investments in research and developmental facilities and new technologies. This section reflects how the company strategically reinvests profits to sustain future success. Financing activities detail how Apple manages relationships with shareholders and creditors. This includes issuing or repurchasing stock, paying dividends, and borrowing or repaying debt. These actions show Apple's approach to maintaining financial stability and rewarding investors. Overall, each section reveals how Apple earns, invests, and distributes its cash, offering valuable insights into the company's financial flexibility and long-term state. Overall, operating activities is its main source of cash, generating about $118 billion in 2020-24 fiscal year. Strong product demand, growth in services, and cost control all had reasons why this resulted. Adjustments for non-cash items like depreciation and working capital changes to ensure accurate cash representation. When it comes to investing activities, cash inflows came from maturities and sales of marketable securities and asset sales. This reflects Apple's strategic investment and reinvestment decisions. When it comes to financing activities, cash from debt issuance and stock transactions supported capital flexibility. Apple effectively balances returning value to shareholders while maintaining a low cost of capital. Some major uses of cash is highlighted in this slide. Operating uses include increases in accounts receivable and other assets, showing higher sales activity and reinvestments in operations. Investing uses include $48.7 billion spent on marketable securities and $9.4 billion on capital expenditures to enhance infrastructure and support innovation. Overall, these outflows reflect Apple's strategy of reinvesting for growth and maintaining a long-term competitiveness. Net income was $97 billion versus operating cash flow, which was $110 billion, which shows Apple's strong cash generation beyond accounting profit. The key differences here come from non-cash items like depreciation and stock-based compensation that was added back. Working capital changes reduced cash due to timing into receivables and payables. Takeaway from this slide is that Apple efficiently turns profit into real cash, strengthening liquidity and funding growth. Reconciliation adjusts net income to cash flow by removing non-cash items and timing effects. This adds back non-cash expenses, depreciation, amortization, and stock-based compensation. Working capital changes, which increases in receivables or inventory using cash, decreases in payables, and reduces cash. Deferred taxes and liabilities reflect timing differences between accounting and tax reporting. Overall, it shows how accrual earnings translate into real cash generated from operations. Net income versus cash flow includes non-cash items and timing differences. Accrual accounting records revenue when earned and expenses when incurred, not when cash moves. A company may show profits but still face cash shortages if money is tied up in receivables or inventory. The cash flow statement provides a clearer view of liquidity, solvency, and financial flexibility. Strong operating cash flow. Apple generated about $110 billion from core operations, showing consistent profitability and liquidity. In operational efficiency, their strong demand for products and services combined with disciplined cost control sustains robust cash inflows. Their strategic negative investing cash flow signals purposeful spending on innovation, infrastructure, and securities, fueling long-term growth. When it comes to capital management, Apple returned over $100 billion to shareholders through buybacks and dividends while maintaining flexibility via low-cost debt. When it comes to financial strength, the company's balanced cash use supports a self-sustaining business model that funds innovation and shareholder value. Some financial weaknesses was over $100 billion was spent on share buybacks and dividends, which enhance shareholder value but limit cash flexibility. This may reduce the ability to respond quickly to economic shifts or new growth. Operating cash flow remains strong but shows slower growth, signaling possible product market saturation. Overall, this reduced liquidity flexibility from large cash commitments, dependence on continuous high operating inflows, exposure to consumer market risks, all is why Apple remains financially strong but should balance buybacks, preserve cash reserves, and focus on strategic reinvestment to sustain long-term stability and resilience. In conclusion, Apple's strong operating cash flow highlights its profitability, efficiency, and continued global demand for products and services. The company's heavy investments in innovation, R&D, and share repurchases are intentional strategies that build long-term shareholder value. Consistent free cash flow generation reinforces Apple's financial strength and operational excellence. While there are minor weaknesses like high capital spending and reliance on global markets, they are manageable due to Apple's strong liquidity position. Apple is well positioned for ongoing financial stability and success through sustainable cash generation, strategic reinvestment in innovation, disciplined financial management, and balanced approach to shareholder returns. Overall, Apple's cash flow performance supports its reputation as a financially resilient and forward-focused organization.